Let's talk about taxes, one of your favorite subjects, I'm sure, but it does actually have a big impact on cash flow, as you know. But before that, let's talk a little bit about something that does impact your taxes and does have something to do with keeping you compliant inside of your tax returns. And that is keep your personal stuff out of your business. Don't try and put your boat in the business and write that off as an expense because every once in a while you take a customer for a ride in your boat. Or don't use your business to finance your $80,000 sports car because you feel like that's something that everybody else is doing, so I should be getting away with it too. Does the $80,000 or $90,000 sports car make sense to your business? Does it have an impact on your customer's experience with your business? Going back to some of the things that we talked about, managing your overhead expenses, does it impact your employees or team members' experience with your business? I don't think it checks either of those two boxes. So keep that personal benefit, that personal expense out of your business. So let's get back to taxes. And that does impact your tax return because if you're trying to run your personal stuff through your business because you've heard about John down the streets doing this on his business or somebody else is getting away with this in their business, don't do it. If you're audited, that's one of the first things that they look for in audit in any small business is what of your personal life are you trying to expense through the business? So taxes overall, for most small businesses, you're either an S corp or a partnership entity. So the entity itself doesn't pay taxes. That income flows through to you personally, but there is certainly a tax impact of on the profitability of your business. The important point is here to plan for making your tax payments. Make that part of your cash flow plan. And covering the tax liability on your personal return can come and should come from the business in the form of, if you're an S corporation, shareholder distributions. If you're a partnership, there should be an annual partner draw to help each partner cover their tax liability from the profitability of the business. And you need to build that into your projections. That's part of your balance sheet forecast, is projecting out in the equity section those distributions or draws to cover income tax. Work with your CPA. Figure out the best way for you to take money out of the business that is compliant within the tax law, and make sure you're working with your CPA to estimate what your tax liability is on an ongoing basis. That should be something that's reviewed either quarterly or even monthly so that you're budgeting for and forecasting out the cash flow impact of covering your taxes. If you want to know more about this or more just in general about cash flow planning, cash flow management, click the link below to our ultimate guide to cash flow management and improvement, or find it on our website. You'll be able to download it there.